Hello guys, welcome to the show. Listen, today is Friday, the 4th of May, 2018, and let's get started. Let's open up the charts. Hold on here, just one second. There. Okay, let's open up the charts right here. We're going to go to the silver price first. And what we're finding is the silver price is right back in its smack dab in its range again, more or less. It's at the bottom side of its range, really feeding on the bottom side of its range right now at 1638. Now, the reason why the silver price at this range right now is actually showing strength is because of the dollar, but we're going to get into that later. Take a look at Bitcoin right now. Bitcoin is 96.57. It's hit resistance in around 97, 9800. The question is, will it break through that? Will it break through $10,000? It's evidently having quite a bit of resistance, just under the $10,000 mark. My feeling on it is that, yes, Bitcoin is going to break through the resistance over the next little while. This is what my feeling is. This is what my gut's telling me, but I mean, do not base a purchase on that, on what my gut tells me. But because I think that there's a Bitcoin crash coming up in the future when the stock market rolls over. But I think that might be a few months from now yet, because the bond rates are not moving very quick. And that's why I think that the stock market is going to hang on for a few more months yet. It's starting to shape up, so it's looking like the stock market's going to fall this fall. It's looking like the market crash is coming this fall. That's what it's starting to look like at this point in time. Coin market cap. We're looking at Bitcoin at the market cap at $454 billion. Bitcoin dominance is at 36.1%. I'm expecting Bitcoin dominance to slowly keep dropping back and keep dropping back, and these other coins to become more and more powerful all the time. The coins that I think are really the top ones that are going to be the order that I think it's going to be at is I think it's going to be Bitcoin is still going to be number one. I think it's going to be very closely followed by Bitcoin Cash, which is probably going to have an awful lot of market capital. Then Litecoin is going to be in the third position, I think. Then you're going to probably have Ethereum. This is how I think it's going to stack up. And then you're going to start having your other coins, like possibly IOTA or Dash, and these other coins like Monero. Don't forget Dash and Monero, even though they've dropped back. Tron's a good coin, from what I understand. These coins are going to line themselves up different than they are now in the future. If you can actually figure out exactly how they're going to line up, you could become rich. But right now we have a mixed bag in these coins in the market. Some are in the green, some are in the red. Now this is the second day in the red for EOS, which means it's probably a pretty good value. They're pretty good value if they've been in the red quite a bit. Tron's in the red, you know, down 7%. Might be a good time to take a look at some Tron. Now upside, Litecoin is up today. It's up 3%. Ripple's up, and so is Ethereum. So you don't want to touch those coins today, you know. So anyway, now Dow Jones right now, it's up 45 points on the day. It's 23,976. If we go back to the 6-month chart right here, we're going to see the resistance is at 25,700. So it's not going to go over resistance. And there's also resistance at 23,000. So it's not going to, not resistance, but there's support at 23,000. So I don't believe it's going to go under support. I think it could go down to support, bounce off of support, and then stay down close to the support level. I think that's probably what it's going to do over the next little while, and have a little bit of a rebound off of support being 23,000. Have a little bit of a rebound, but I don't think it's going to make it past resistance, which is 25,700. So I think it's going to follow that range more or less for the next little while. I think it's going to become somewhat range bound, the stock market, until we get those 10-year the 10-year treasuries, the rates rise on the 10-year treasury. That rate has to get up probably to about 3.25% or greater before we're going to see a move in the stock market downwards again. And it's going to get there. That 10-year treasury is going to get there. There's quite a few buyers coming in yet, and they're chasing yield. We got to get through all those buyers who are chasing yield, and they have to start realizing that they're buying a losing proposition. When that time comes, when they start to realize that it's a losing proposition, when it starts to dawn on them that it's a losing proposition, that's when the bonds are going to really start to roll over. And the Treasury then is going to be pumping more and more and more. Basically, what it really amounts to is the Treasury, the bond sales are going to be bigger and bigger and bigger as they don't roll these bonds over anymore. They let them expire, and they're basically the Treasury's dumping them into the marketplace. And they started with 10 billion a month in October, November, December, and they increased it to 20 billion on January, February, March. Now, April, May, June, we're in the 30 billion, and then they're going to increase it to 40 billion. Now, this is a cumulative effect. Every month, they're doing 40 billion. Soon, they're going to be doing 40 billion, and then they're going to go up to 50 billion. And so it's really going to start to have an effect is when it hits the 40 billions and the 50 billions. It's really going to have a more profound effect when it hits the 50 billion every single month. They're basically trying to unwind quantitative easing, and it was quantitative easing that pushed these markets up to begin with. It is a no-brainer that this is going to let the air out of these markets when they get to 50 billion a month. They're not going to get very far doing that. And also, interest rates, I can't see them getting more than two more hikes, 2 more 25 basis point hikes. They delayed this hike. They're going to do the next one when it comes around again. I should look it up and find out when it comes around again, but I know they're going to do the next one when it comes around again. And they're not going to get past the one after that. It'll be the end of it. They cannot normalize rates because it's going to exponentially increase the debt. Even what they've done already, moving it up, is going to exponentially start increasing the debt every year because they can't afford. They got such an outstandingly large debt. And we're going to talk about Canada's outstandingly large debt in just a second. Here we go. Crude oil, 68.53. It's up 10 cents on the day. We're not even going to look at that. We're going to get moving here. We're going to do the bonds and rates right here. With most everything is falling yields. The only rising yields is on the 2-year, and it's only very, very slightly rising. U.S. 10-year is 2.94%. It's showing some strength there. It's the yields have fell a little bit. I don't expect that's going to last real long. I think that's going to turn around after a little while. Now we're going to take a look at the U.S. dollar. U.S. dollar is 92.75. It hasn't fell back to 91 yet, and I'm expecting to fall back to 91 on the U.S. dollar. It's still showing strength, and this is why gold and silver is not having any sort of rallies. The silver price is actually showing a bit of strength by staying in its range and not falling. So now let's take a look at something we normally don't take a look at. We're going to take a look at the Canadian dollar. We saw a sharp fall off in the Canadian dollar, and then it's bounced back today. There's an awful lot of volatility there. So we see that sharp sell off, and then we see a bounce back. This is showing volatility in the Canadian dollar, and the reason why is the Canadian economy. It all has to do with household debt. Canadian economy, household debt is a monster problem. Canadians have taken on an awful lot of debt in their households. I was reading here, it's $2 trillion in debt. The Canadians are $2 trillion in debt. And of course, this debt is owed to the banks. So the banks are basically holding $2 trillion in debt that the Canadians owe the banks back. And the Canadians, here's what it says. In Canada's case, household debt is 170% of disposable income. In other words, the average Canadian owes $1.70 for every dollar of income that he or she earns every year after taxes. So how on earth, if they owe $1.70 for every dollar of income that they make, so the guy goes out and he works at McDonald's and say he makes $200 a week, he owes $370 for that $200 he makes. So if he gives all of his money back, he's only paid half of the debt he needs to pay. And they're adding on an additional interest rate on all of that debt. Interest needs to be paid. Interest is accruing. And so we know that the banks ultimately are not going to get that debt back. But what they're doing is they're carrying the debt. The Canadians are carrying the debt. They're saying to the banks, okay, we're going to pay this back, when there's not a hope in hell of them ever paying it back. Americans are doing exactly the same thing in America. Same thing's happening in America. Every American owes every single American household owes something like $500,000. Each and every person in America owes like $500,000. We know that they're never going to be able to pay these debts back. It's far too much. But all of the banking system is keeping these debts going. And this is what's keeping the banking system going. If the bank says, okay, we're going to do a deal, we know you guys can never pay this back. And the guy says, yeah, we know, we can't ever pay it back. Okay, we're going to write it off. As soon as they wrote it off, the banks would all be under, completely under. So they have to keep this whole scheme going in order to keep the banking system going. What a mess we're in. What a mess the whole world is in right now. Everything's going to spiral down into this deflationary funk. And then what they're going to have to do is the ones who have the license to print money are going to have to print money. It's either that or their necks are going to be on the line, quite seriously. They are going to be held responsible for this mess that they've created, and they're not going to stand there and take responsibility. Not one of them. They're all going to pass responsibility off, and there's only one way they can do that. Well, let's call it the Great Print. Well, they don't actually have to print anymore. They can just create the money by entering digits into a computer and hitting the enter key on the computer, and all of a sudden that money pops magically into existence. What do you think they're going to do? They're going to take the easy way out. They're going to push that button that says, okay, let's create the money. So listen, thank you guys for listening to this market report. I'm going to be slowly getting better over the flu. I don't think I'm quite as stuffed up as I was yesterday. I don't think my eyes are watering quite as bad. Thank you for listening, and like and subscribe, and also go over there to the Delta Report too. That's where I do my news stories. You know, I don't really do so many news stories over here. I do news on financials over here. Over there, I carry a lot of news stories. Go over there and like and subscribe. You know, the channel needs to get to 2,000 subscribers. It's just short of 2,000 now at this point, and it's slowly growing. It could be growing a little bit faster. Listen, thank you guys for listening, and we'll catch you on the next show. Bye-bye.